Let's do some top day trade now with Knuckman, the chief market strategist at bullseyeoption.com, and Flynn of Fox Business News Network contributor. Round number one, guys, cash out. Mutual funds are losing millions. Investors are pulling out of funds at record paces. Are you worried about swift draws?
I think markets change. Think about it. Everybody used to trade in a pit at one time. Now this is one of the last trading floors that's out there. So it's an evolution of the markets. And I think people realize that mutual funds, with their somewhat high fees that they can charge, are not an efficient way to invest when you can now trade ETFs that I think give you a better bang for the buck and are more direct and give you a better payoff.
I think it's a direct relationship with the higher interest rates, right? People are finding that they can get out of the stock market, get higher return in bond funds. So I think you're seeing a switch. I think it's a concern for banks, right? Because you're losing a lot of money where they, brought in a lot of fees, a lot of margins. But from an investor standpoint, I think what it tells me is that it's time to get into mutual funds if you're not into them. Obviously, you should take advantage of higher interest rates, but probably a good time to buy stocks when everybody else is getting out. That's the time to get in.
Round number two, Akira's pick, or maybe we should call this hot wings, because as the Greek myth goes, a man's wax wings melted when he flew too close to the sun. Which one is the better buy in your minds, airline jets or solar stocks?
I'm going to go with the proven technology, right? The airlines, right? They've been around for a long time, right? And, to be honest with you, you look at the alternative energy space right now, it's struggling. They're losing billions and they're depending on a lot of government support to keep in business. So that's not a good investment. When I see that the government has to keep these people going, and we're hearing from some of the biggest CEOs in this industry that it's not sustainable right now, the path that they're on with the cost of labor, the cost of parts. So probably better to go with the airlines than it is with these alternative energy stocks.
Well, they're both an energy play. And I think that the airline stocks are really going to benefit from the fact that oil prices come back down. But, they do know how to hedge their risk and use futures in the oil market. But if you look at jets, it's got a PE of 17. It's down 12% on the year versus the S&P, which is, up about 15% from its 15% in the last 52 weeks. But if you look at CAN as a stock and don't think about the politics behind it, it's had a dramatic drop. It's down 40% in the last year. It's made a bottom base. And I like this fact here that it was at 85 in February. We're at the 40 level right now. So from risk reward, I like it. I like the fact that we have bullish divergence and made new lows, but not new highs and implied volatility. That's usually a sign when it's oversold and you can see a sentiment shift. And that's what I'm looking for in the price without the policy.
Round number three, Burry Theory. Google and Microsoft made $20 billion in profit for the quarter, but the big short guy scored when those stocks sold off. Are you a big tech buyer or crier?
Well, as much money as these companies have been making, the truth is the market thought they should be making more. And we're seeing a shift, of course, in the sales for Apple phones that are looking like they're going to miss expectations. And so it's really based upon the fact that they missed expectations. Now, having said that, these stocks are both very, very good, but we've seen a shift, I think. We're moving away from the more traditional stocks that have been red hot to other stocks such as emerging markets that look like they're undervalued. So I think you're seeing a bit of a shift. Not that those stocks aren't really good, but they probably got too high to touch the sky.
Alan?
So I think the big lesson we learned was options. He had limited risk options. He found a market that had been overdone on the upside, bought some puts, and a modest 10% pullback in those stocks produced huge wins for those right options. So, I think it was a matter of timing and the tool that made him successful. But I'm not thinking that the tech sector is over yet. We've had a nice little U-turn in the last week, and I think that might have been just a fake out shakeout, and we'll see what happens next.
Well, that takes us on to the bonus round question for today. True or false, Mattel has a new Ken doll based on Ryan Gosling's Ken character in the movie Barbie.
That is absolutely true. And that movie has been a boom for Mattel.
Alan, true or false?
No, I'm going to say false.
It's true. Phil wins that new doll is Knuff. Business First AM will be right back.
Go to businessfirstam.com for where to see our show on TV.